All right, let's go over the trades on the day. Fed minutes, very hawkish, more hawkish than expected. Market sold off. Huge gains. The highlight of the day is gap continuation 2019, 6,400 per contract. And that was, all it takes sometimes is one big winner to make up for a series of losers. Market is still open. We have a volatile session, 15 minutes left. So we have one position left in the 200K portfolio where we're short the ES. And we're up about 4K on the day total, as we had some losers as well. And the 50K portfolio is done for the day, minus 650 on the day. Let's go over the trades. Like I said, the Fed minutes came out. They were more hawkish, talking about reducing their balance sheet, which directly relates to taking money out of the market. And so it was more hawkish than expected. Hawkish means higher interest rates, less accommodation. Dovish means accommodative, easy money. And so hawkishness. We've been on a dovish path for since 2009, and the Fed is starting to turn more hawkish, I guess you could say. It has to at some point. Can't keep interest rates at zero, and stimulus, Fed stimulus, where it as emergency stimulus, and so it's a normal adjustment. But I think the markets will have a pullback based on that to some extent, maybe larger than anyone expects. So we'll see. But big sell-off today, 6,400, and this was the only Nasdaq strategy to trade today. A big day like today would have liked to have seen more strategies trade, but we'll take what we've got. And so nice trade on ES. The losers on the day were the dip buyers, Cobra CT3, down about 625 per contract. Tick count trend lost about 1,000 per contract. VIX has just been very low. This strategy takes advantage of choppy market conditions when the market's low. And the VIX has been unusually low for this type of market. And 60-minute breakout, down about 1,100 on the day. Got this long yesterday, rolled over, stopped out. Market bounced as soon as these longs were stopped out, so it felt like one of those days where it was going to rally on the FOMC, but it did not. It sold off. So 60-minute breakout, finally had a nice winning trade on this. This has been a very challenging strategy. It's as if our sell signals were a buy signal for the dip buyers, and today the dip buyers didn't do too well. And so the market sold off. The short trades worked, and after hours last night, down about 700 per contract, and so that lost as well, 725. So these longs lost, the long trades lost. The short trades were winners on the day. We had this ES short. Like I said, it'd been nice to have some more short trades on ES and Q, but those were it. Crude oil, we had some longs, gave back most of the gains into the close. Last 15 minutes, it sold off. Right around break even, really on the trade, only about $30 per trade. Natural gas, no trades. Gold had a nice short trade and into the close. First trade was got short. Feels like gold is always one of those markets that's challenging, is always fighting with us. And then you get real liquidity, and caught the trade on the Fed move. Got short, up a little bit on the day, up about 150 on the day if you put both trades in there. And then silver, no trades. Copper, no trades. Soybeans, no trades today. And then we have the 50K portfolio. We had the Cobra crude trade. These are 9 contract trades. So right around break even on that trade if you divide by 9. And down about 625 on this. So down 650 on the 50K portfolio, up about 4K on the 200K portfolio. And like I said, the market is still open, so the number for the 200K could fluctuate between now and the end of the day. There could be a couple more trades to fire and some fluctuations that could be a little bit different by the end of the day. But as of about 12 minutes to the close, those are the numbers. Let's look at the market internals on the day. Very weak advanced decline line. The weakest advanced decline line we've seen in a while, minus 2,000. The advanced decline line has been extremely strong. VIX has been extremely low, and the market has felt very bearish. The way it's been selling off, more bearish than bullish, while the market internals and VIX have been very bullish. So resolution market, Nasdaq sells off, S&P sells off 1.6%, 2.7%, over 440 points on the day. Watch out for more selling. Watch out for limit moves. Watch out for margin increases from your broker. Let's look at the advanced decline line. I thought this was interesting. Daily chart, it's been since December the 20th, the advanced decline line has been very strong up here. So it stayed above minus 600, and today it finally comes back down here to minus 2,000. So first time in a while. So VIX is also moving higher. It keeps getting the VIX keeps getting slammed, and I don't know that the hawkishness of the Fed will not be conducive to dip buying, in my opinion. So we could see more selling in the short term. Like I said, watch your longs, keep your stops, watch your automation, watch out for limit moves, watch out for margin increases in the market. If the market sells harder or much further than it is right now. So those are the trades on the day for January the 5th, 2022.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.